Good morning. I was just looking back at the last couple of months of Abroad with a View, and I have to say that it looks like I was right at least more than 50% of the time, which actually makes me a winner. As for the last few months in review, I didn't doubt that the Fed would raise rates or that oil prices would continue to crash, nor did I waver about China and the renminbi's ongoing devaluation. I also worried about what I called overly euphoric markets back in October, and I advised investors to take some profits and go with caution. I talked about electric cars and their batteries, I talked about the cloud, and I talked about the possible emergence of emerging markets, MJ stocks and Apple. Got some right, got some wrong. As I look to 2016, this is what I see. China. More volatility, more pollution, more people, more artificial management of their currency. We need to see more reform coming out of China, social and economic. If they want to play with the grown-ups, they got to act like adults. And don't worry about the so-called slow growth in China. If they can achieve 5%, that's really darn good. Europe needs to get the growth engine going, a difficult task when you consider the migrant crisis and all the differences between European bloc countries. I also will watch for oil and other commodities and hope that the next year will see a bottoming out of the oil prices, accompanied by some oil company failures. Yeah, sure. We also have to watch the US dollar because any dramatic additional strength, and I mean dramatic additional strength in the dollar, will have a continuing negative effect on commodity prices and emerging markets. As rates continue to rise in the US and maybe begin to bottom out in Europe, look for companies that will benefit, such as banks and financial institutions. I've said that before. There seems to be a consensus among market observers that European stocks are worth looking at. And I really don't like consensus, but I don't disagree. So keep an eye somewhere in Europe for opportunities in the stock market. And will the emerging markets emerge again? Brazil? A lot of people are looking at Brazil. Will Argentina, led by its new president, take the lead? It's not unlikely, so keep an eye out for my home team. In the USA, we're going to need a bit more economic growth to sustain the recent stock market gains and give us some nice corporate earnings. I'd like to see some Christmas numbers before I guess on growth, but also remember that weather conditions have been awful lately. Too much rain, too much heat, too much cold, and consumers probably aren't going out as much. And while I don't think that elections will cause the market to dramatically go either way, because they really never have, I also expect a bit of volatility around what the candidates will be saying, especially the final two candidates, or maybe it'll be three. I learned a long time ago when I was an active participant in the then $1 trillion a day foreign exchange markets that all you really need to do is to make a list of the factors that will affect the markets. It doesn't matter whether they go up or down or sideways or they don't do anything. You just have to have in your mind and maybe in writing a list of those factors that will affect the markets. So there you have it. China, the US economy, the direction of interest rates, oil and commodity prices, and emerging markets. There you have it. Make your list and let me know what you think. Now, I don't get paid for this, at least not yet, but I have often said that I'm not an economist. But let me give you an idea of what people that get paid a lot of money to have an opinion say. And while I'm at it, I'm going to give you the quote of the year to UBS for the following quote. And I have to read, so bear with me. UBS said that, quote, barring any unforeseen external shock or a recession, and if earnings continue to improve, 2016 should be a positive year for US equities. Really? And they get paid for that. Anyway, this will be my last report for the year, and I will not be back until February, where I hopefully will have a new and improved product. So I wish you all a very happy new year, and thank you for checking in once again.